Welcome back. Okay, so in this vlog, we're gonna just jump right into it, right? In this vlog, we're gonna jump right back into chapter 12, which is Love Your Losses. They are a trader's best friend. So we're gonna jump right into that and pick up right where we left off. Okay, scene 6, the Whipsaw Club. All right, you're day trading. Strong market, strong stock. You buy at a good entry point, stock moves up and then stalls, rats. Market goes against you. The stock index futures slip and the tick falls off, but the trend stays low. Good. You hold your position and stay humming. The trend always wins. Suddenly, and when I say trend, it's TRIN, we're not talking about the trend, okay? Suddenly, the futures dive hard. The tick follows. Oh no, you're puzzled. Even though indexes and indicators edge down, the trend is holding relatively low, under 0.8. Market makers vanish from the bid. Your stock slides through its immediate support area and through your stop. Whence? Support is an area, isn't it? Lots of books say that. You'll give your stock another 20 cents or so before you get out. The 20-cent bid leaves. Just when you're poised to click on your sell order, the stock rallies 25 cents. Whew, close call. In a nanosecond, the downtrend resumes. The trend climbs only slightly. In a nanosecond, the downturn resumes. The trend climbs only slightly, while other indicators trickle through support areas. It's a slow decline, like water torture. This is a pullback, right? After all, nothing goes straight up, retracements happen. Your stock slides and you see high volume coming into each red candle. Enough already. Bite the bullet time. You sell and swallow your point loss. Double rats. And suddenly you feel vengeful. If this stupid stock is going to fall, you might as well short it. Oh, this happens. You'll make money on the doggone thing one way or another. When it rallies, it's easy to short on a rally where you have the upticks you need to enter the trade via the uptick rule. You short 500 shares and place your stop loss 25 cents above the rebound price. There, take that, you stupid stock. The stock hesitates, falls 30 cents, then stalls again. Suddenly, the futures bounce, the tick shoots higher, your stock hits minor support, the volume spike rockets up. On your level 2 screen, a boatload of players appear at the bid. Groan, please stop. Maybe this is just a rebound in the stock's downtrend. Do you get out now or do you wait? The stock steps neatly over your stop point and soars even higher. You grit your teeth and cover your short. Another loss. One going each way. Now you're a card-carrying member of the Whipsaw Club. This book is just nothing but truths. Loss avoidance tactic. Okay, first, you let the stock slip through your initial stop loss without taking action. If you sold then, you would have shrugged off the loss as part of the business and would have eliminated the need for revenge. Don't get mad, don't get even. Rarely works out in the stock market. Second, your anger caused you to short the stock just because it was going down. Anger is an emotion we can't afford when trading. Third, the trend truly did tell a story. Although prices are at the bottom line, I've experienced a few days when the tick dropped like a sack of moldy potatoes, and the trend remained under 0.8 for hours at a time. It's a strange divergence and certainly contradictory. The only way to read such diversion is confusion. When events like this take place in the market, jump out and stand on the sidelines. We cannot outguess confusion or a trendless market. Scene 7, going ballistic. You know the drill, strong market, you're scanning charts for a day trade on the long side. Suddenly a mutual fund manager on CNBC mentions that Missile.com is the new darling of the wireless communication stocks, and he likes it. He loves their new product, and their CEO is a wonder boy. Wow, that ought to do it. Wireless stocks scream skyward whenever someone on CNBC signs their name. You quickly bring up Missile.com's daily chart. Whoa, a week ago it was 11, today it's 44. It's trading miles over its 20-day MA, and it's way overextended. Still, who can argue with success? Ugh. A glance at its level 2 screen shows hungry piranhas eating through the offer like lightning. It's at $45, $45.50, $45.80, $46, $46.40, $46.70. Just a half point or so. That's all you want. That's what level 2 is for, right? Ultimate speed. You throw in your offer 5 cents above the current ask and get hit in a nanosecond. 500 shares at 47, sold to the highest bidder, you. Missile.com quivers for a few seconds and then plunges. No, wait. Hold it. The time and sell screen turns blood red with down ticks. The missile reverts into a fizzle. Your hand freezes on your mouse. Please stop falling. Seconds later, it screeches to a halt at 44. You're 1,500 in the hole. How do you climb out of it? The fund manager on CNBC said Missile's a good stock, didn't he? Well, if you buy another 500 shares here at 44, your net price per share would be $45.50, better than 47. So you buy 500 at 44 and dig in. Your scalp is now a swing trade. The next day, the market opens down, and the wireless index sings the blues. When Missile hits 41 and holds through lunch, you take it as a sign from above. This is the bottom. Surely it'll break out from its lunchtime congestion and turn north again. You buy another 500 at $41. After lunch, though, the candlesticks in the congestion pattern starts closing on their lows. Wince. You know what that means. And it does. All fall down. Your stomach churns. Your palms sweat. You're in so deep. How do you get out except with a horrendous loss? You check Missile's daily chart again. You find support around $39. Surely it will bounce off that. By the end of the day, it slips to 39 and hovers there. Okay, just one more time, gritting your teeth, you buy an additional 500 shares, maxing out your margin. This sounds insane. Like, I've never even done this, and I've done some stupid shit. During the next few days, the wireless telecom group, already overblown for weeks, gets punctured. You sell other stocks at a loss to avoid a margin call. Missile tanks again, diving through support at $36 and heads for who knows where. Warily, you check the daily chart. The next support is at $28. You can't take it anymore. You sell out at $35. You close your eyes and refuse to look at your account balance. Loss avoidance tactic. Okay, loss avoidance tactic. Before we start, if you think this can't happen, it can. This very situation happened once to a friend of mine. To a friend of mine. First, it's easy to get caught up in the euphoria of a running stock. When the level 2 screen flashes a stream of green, we slip into a hypnotic state. In that trance, we click on the buy button. Next comes the oh no second when we realize what we've done. It's always followed by the prayer to the trading god. Please, please get me out of this trade alive. If you do, I promise I'll be good for the rest of my life. If you get sucked into a screaming trade because of a momentary sanity lapse, close it as fast as you can. Fix your mistake before they turn into big losses. As traders say, your first loss is the smallest. Second, when you see a stock trading way above its 20-day MA on a daily chart, it's overextended, like a rubber band stretched too far. It's likely to snap back soon. Leave it alone until it pulls back at least to its 10-day or 20-day MA, which it will inevitably do. Third, averaging down means you nibble on a stock in a downtrend at various points. You hope, not good, that when it rises, your average price will be low enough to save some gains, or at least to get out even. When to average down. If a strong stock and a strong market pulls back to an expected reversal point, then breakouts and a trend continuation, averaging down is acceptable time trade management. When not to average down. When you're trading short term and your stock reverts from strong to weak, don't continue to buy more. Sell your position if it sinks to a support area, holds and breaks out on volume with the market reversal trending the same direction. That's when to consider re-entering. In conclusion, you see that scene 1 happens regularly as part of this business. Scenes 2 through 7 demonstrate how ignoring a position's initial stop point causes 99% of agony that follows. The solution is so simple, and for some reason so hard to follow. As the saying goes, just do it. Honor your stop-loss points each time you make that choice. Congratulate yourself. This is a tough business, and success deserves recognition. Center point: the truth about fear. Begin difficult things while they are easy. Do great things when they are small. The difficult things of the world must once have been easy. The great things must once have been small. A 1,000-mile journey begins with one step. We are all acquainted with fear and the way it makes us feel. Regarded in the proper context, however, it is really a positive emotion. It warns us of impending dangers so we can take steps safely. Unfortunately, we tend to hold on to fear long after it's outlived its usefulness as a warning device. Then fear twists into all kinds of related detrimental emotions, from low self-esteem to stress to panic. When fear digs its claws in deep enough, it takes conscious effort to release it. Here are 3 things that can help. First, when you feel fear, acknowledge it. Notice how it feels and where it's located in your body. Many of us feel it in our solar plexus. Sit quietly. Let yourself feel it in a non-judgmental way. What thoughts are involved? What message does the fear have for you? Treat your fear as though it were a small child. If a 4-year-old came up to you and cried and said she was afraid of the boogeyman, what would you do? You'd hug her and ask her to explain her fears. When she finished, you'd assure her that the boogeyman isn't real and soothe her with positive, affirmative thoughts. That's exactly how we should treat that part of ourselves that operates in fear. With love and positive emotions. After all, fear is not the truth. Fear is nothing, trying to be something. It has only the power we give to it. Recall a time in your life when you felt supremely safe, secure, and loved. Draw upon that feeling that memory holds for you. Gently replace your negative feelings with the positive, loving feelings of those memories. Because love and fear are polar opposites, love drives away fear. Similarly, light is the reality, darkness is the absence of light. When you let light in, darkness disappears. It is not real. It is not real. We recognize fear as the warning tool that it is. We acknowledge it, learn from it, and then let it go. In doing so, we lift ourselves up one more rung on the ladder to happiness and success. The end. Awesome. Okay, so for those of you who like the quiz questions, let's show those right now. And then of course, just like all the other vlogs, when we return the next time, we'll go over the quiz answers. We'll go over the quiz answers and the rationales. And like I always say, thank you for joining. Thank you for being dedicated to yourself. Thank you for being dedicated to your craft. I hope you learned something here. I'll see you next time.